Hi, I'm Scot Mentzer with Orchard Hill Mortgage, and this is your weekly mortgage update. Let's take a look at last week's rates and give a recap. Unfortunately, mortgage rates moved slightly higher last week after seeing rates fall the week before. This week we could see mortgage rates move more erratically than normal, driven by markets' reaction to midweek inflation data and how markets think it will affect the Fed meeting next week. If inflation data comes in hotter than expected, we could see mortgage rates move higher as markets anticipate the Fed would be more aggressive, hiking rates to fight it. However, surprisingly low inflation numbers could help rates. Alright, let's take a look at what's affecting rates this week. We have two items, inflation data and the Fed. Wednesday brings consumer inflation data, which will be the last major economic data point before the Fed meeting next week. Thursday brings wholesale inflation data, but that data usually has more muted reaction from markets and is less of a concern to mortgage rates. Markets are currently looking at a 40% probability that the Fed will raise rates at the November meeting for the last time this year. Markets think it is very unlikely that the Fed will raise rates at the September meeting, instead skipping a meeting like the Fed did in June. But keep in mind, if the inflation report on Wednesday is higher than expected, this could cause the Fed to raise rates, which will not be good for mortgage rates. Well, that's all I have this week for the weekly mortgage update. I'm Scot Mentzer, Orchard Hill Mortgage. Hopefully I'll see you again next week. Have a great week.